Could you buy a 400K home in Colorado Springs and only really need financing for 260 of it? A new land lease program with Lease can lower both your monthly housing payments and the cash you will need upfront. But there is a major catch that is going to grow year after year. So today, I am running the exact numbers on a local Colorado Springs home to show you exactly how it works, who qualifies, and when you should probably avoid it. So let's get into it. Now, here is the basic concept. A stately is not a traditional mortgage. It is not free money. It's a tool designed for buyers just being priced out with these high interest rates and these massive down payment requirements. So instead of financing the entire property, you purchase the house structure while a stately purchases the land underneath. You then lease the land directly from them. So overall, your mortgage is calculated strictly on the home portion itself and not the land. So the land lease will be bundled directly into a single monthly payment that's going to include your mortgage payment, your taxes, and insurance. So you aren't writing a separate check to a stately. And I really want to foot stomp this part. You still get to own the home structure, right? So you get to build equity as the house appreciates. And then you do get to retain full rights to either sell, refinance, and just renovate anything you want with your home. So let's look at a real world example right now here in Colorado Springs. I'm going to pull up 4568 Gun Barrel Drive, currently listed at $400,000. And quick note here, I do like the Lease site because you can see all the eligible properties on their website. In this specific scenario, Lease values the land at 35% of the total property price. That is going to be $140,000. That leaves the physical structure of the home at $260,000. So instead of taking out a mortgage of $400,000, your loan is based solely on just the structure. So that's $260,000. Financing just that $260,000 will drop your principal and interest payments by roughly $1,000 per month compared to just the standard financing. Now let's round out the math. You still have to pay for the land. So on this specific home, the listing estimates a land lease for about $662 a month. So when you subtract that $662 lease from your $1,000 in savings, you're going to be left with a net monthly savings of $377 per month. And because your down payment is calculated strictly on the $260,000 home value, Lease 5% minimum down payment comes out to about $13,000 instead of that traditional $20,000 you would have needed. So that puts you into a $400,000 home while keeping that extra $7,000 in your bank account. So ultimately, you could use this flexibility in two specific ways. You could either keep that extra $7,000 as a cushion, or just use all of that $20,000 you would have originally needed for your $400,000 home to just buy something larger while still keeping your payments totally manageable. Now, I will say, the payments provided on the Lease website are illustrative and educational purposes only, and does not really replace a professional estimate, but it does paint a really pretty picture for you. Now, pay close attention. This is going to be the single biggest drawback for this program. The land lease payment is not fixed forever. It increases annually based on the Consumer Price Index, or that's the CPI, with no annual cap. So I do tell my clients that if this is something you're interested in, I would just budget for a 2 to 3% increase each year. And a 3% increase on a $662 lease payment is going to be about $20 extra per month in year 2. That doesn't really sound like much right now, but if you do compound that over time, by year 15 to 20, that escalating lease payment is going to eat up your initial savings. So around that 15 to 20 year mark, your total monthly payment cost will just cross over what you would have paid on a traditional 30-year fixed mortgage from day one. So that's kind of the reason why the Lease land lease is best viewed as more of a stepping stone, kind of like a way to get into a home today. But if you decide you want to stay long-term, your strategy should be to buy out the land lease or sell the property and just upgrade before those annual increases kind of catch up to you. So overall though, who is this program designed for? Estately has a few pre-qualification rules. So first, you need strong credit. So a credit score of 700 or higher. Next is going to be the income cap. Your household income must be under 200% of the area median income. So in El Paso County, that means your earnings need to stay under $230,000 a year. Third, this must be your primary residence. Once you purchase the home, you must occupy it. This program is not designed for investors. And then finally, there are some property type restrictions. Your home that you decide to purchase has to be a single family home. So you can't purchase a home that's either a condo or a townhouse or like a duplex. All of these types of properties are going to be excluded. And I really want you to understand that this is not necessarily a program for every buyer's situation. It really is more relevant for buyers who have a stable income and a strong credit, but are just really struggling with monthly payments or just the amount of cash needed for home ownership upfront. And two important hurdles to keep in mind. First, because this transaction structure is newer, sellers, lenders, and title companies really need to understand how it works up front. And then second, Estately typically recommends using a specific title company, which is just going to create an extra hurdle when putting in your offer on a home. That is why working with an agent and a lender who know this program inside and out is going to be extremely crucial, because that is going to make sure that your offer makes it to the closing table. So this program is going to be right for you if you are a first-time buyer with a strong credit score who just wants a single family home here in Colorado Springs, but really you're just struggling with the higher monthly payments and just saving up enough cash to get you to the closing table. This program is not right for you if you want a completely fixed payment for 30 years. You're looking to either buy a condo or a townhome, or you're just really uncomfortable with like the land lease structure. And then finally, if you just need some down payment assistance, because that is not a part of this program right now. Overall though, if you are considering this program and just want to see if the numbers look right for your specific budget, go ahead and use the link in the description below to just book a quick consultation with me. I can get you set up with a lender who can just help you run your specific numbers and just figure out if Estately really is going to be the best path for you. And if you are a buyer who doesn't fit within like the Estately parameters, please do not stress. I recommend checking out this video right here. That's just gonna go over some of the different financing options to help first-time home buyers. Thanks for watching, and I'll see you in the next one.